What's up? What's up, traders and traderettes? Good to see you here. Welcome to Bulls versus Bears weekly Forex forecast. My name is Dr. Greg McLeod. What's up? And we're all ready for the start of this week. Welcome to August, and so welcome to Bulls versus Bears. And we have a really great program for you. And if you stay to the end, I have a special gift for you. So make sure you stay to the end. And again, my mission is to help traders become professional traders, the prop challenges using my powerful pip and run system for scalping, going in and out of the market in a matter of seconds. So we only spend no more than 2 hours trading. And so if that's you, make sure that you reach out and join the school community. We're going to talk about that. But I've been doing this for 30 years. I worked for one of the largest Forex broker dealers in the world. I'm a former Wall Street currency analyst and currency strategist, and I have a PhD in Christian business and Christian leadership. And I also am the founder and CEO of the Elite Traders University, and I've helped thousands of traders around the world become profitable professional traders, 5, 6, and 7 figures, trading the markets using my proprietary approach. Okay, so let's get started. I'm going to go ahead and share my screen with you, and then we're going to go ahead and go through the currency pairs. Let me go ahead and share my screen, and we'll share a little sound, a little entertainment there. Let's share screen one. Okay, we'll share screen one and share. Okay. Okay. Again, this is a presentation of Elite Traders University. Welcome to the weekly Forex forecast, Bulls versus Bears. Right. This is what we're going to be doing right now. We're going to look at the different currency pairs and instruments and look for those trading opportunities. Okay, and first of all, I wanted to direct your attention to the risk disclosure to make sure you understand all the risks associated with foreign exchange trading. And I've been doing this for 30 years. I got to go ahead and change the slide. Again, I'm the founder and CEO of the Elite Traders University, and I'm one of the foremost authorities on day trading, short-term day trading called scalping. And I'm the creator of the Pip and Run system, the Trend Spotter Indicator, and I'm a published author, and I have written articles on Yahoo Finance, Daily FX, and the like. And I worked at the world's largest Forex broker dealer on Wall Street as a currency analyst, currency strategist, and trader coach. So I'm uniquely qualified to help you achieve your trading goals faster, better, and greater than anyone on the internet. So that's my claim to fame. And so I'm glad you're here. And I know that my insights, my 30 years of insights will be a great help to you if you've been wandering in the wilderness of trading for a while. Okay. And so our agenda, we're going to talk about the dollar index, the euro, the pound, Aussie. We talk about the majors, dollar yen, dollar CAD. We'll cover gold, and we'll probably do a couple of the indices, and we'll also throw some Bitcoin in there too. Again, if you stay to the end, I have a great deal for you, a great gift that will help you in your trading and help take you to the next level. And it's a gift from me to you. So make sure you stay to the end. Okay. So let's go ahead and get to, I like starting with my top secret tool, which is, I'm going to give you free, I'm going to give you a free gift right now, free access to my market heat map. You're going to come to the homepage of mymarketheatmap.com. It's my top secret way of finding out what to trade, what's hopping, what's popping, what's dropping, and what's not. Green is up, red is down, gray is stay away. Instead of looking at hundreds of charts, I can look at this handy dandy device there. And on your smartphone, on the internet, you go to mymarketheatmap.com, scroll to the bottom, and then you'll have these different colored tiles that will blink. Right now, this is a Saturday, so the desks are closed. Actually, the markets do run, but the desks are closed, and you're not going to see anything moving, right? But when the markets are active, these will flash different colors, and when they're green, we moved past a threshold of a breakout, almost like a Donchian channel breakout, and we see certain pairs will turn green and start our uptrends, and certain ones will turn red, indicating our downtrends. Real simple. I keep it simple. Colors and shapes. I know we keep it simple. When you come to the page, you have the economic calendar. You might say, Greg, it's not working. Just go ahead and kick start it. Got to kick it. Just refresh the screen. You'll say show more. and then you'll get the economic calendar absolutely free, show more, and you get the entire week. And so I like starting off with looking at the fundamentals, what's going on in the world, what traders are actually looking at. If you remember watching the movie Trading Places, you remember about the whole thing's rotating on the crop report. That report was something that came out, some news event that came out at like 8:30, where the Duke brothers are trying to get access to this report to know how to trade it and to make money, right? So, but that happens every day in the Forex market, in the stock market. At 8:30, there is a news release, or sometimes you get news releases around the world at different times as well. But around those news releases, it gives us a lot of volatility. It tells us what traders are actually looking at. In fact, there's flags on the side to tell you what country the news is coming from and the time, and we can actually look at it. And I only look at the high impact items, the red items. I don't look at the yellow. I don't look at the orange. I want to look at the high impact items, because when I look at the high impact items, what I'm going to get, I'm going to see that's where traders are placing their attention. That's what they're going to be watching and actually placing, maybe placing orders, or getting ready to actually look at placing trades in that market, right? So if you see like the American flag, like right now it's the French flag. So we got HCOB services, PMI. Well, that the euro is going to be on the docket to trade. Our first one is Monday, actually, the Japanese yen. So we're going to look at dollar yen. There's going to be a lot of volume in the yen pairs. So you look at the flag and it'll tell you what to trade, basically, or what to look at, right? Now, you may not look at it or trade it right during the announcement because there's a lot of volatility, but we'll wait. We'll do a news fade strategy and wait an hour after the news comes out. It's just like chumming the water. The news is like putting a bucket of bait out in the water, and it brings all the fish to the boat so you can scoop them up with your net, right? So this is what the news does. It throws out all this yen, Japanese stuff, and then all the people trading the Japanese yen will show up. And so guess what? We're not going to trade the Canadian dollar, right? Unless we're trading CAD yen. We're going to trade what the flag says, right? So most traders make the mistake of trading the wrong thing. They'll sit hours and hours and hours in a currency pair, not knowing what to trade because they don't know what's going on. They have their head in the sand. Oh, I don't want to look at the economic calendar. It's too complicated. Well, it's like, you're just shooting fish in the dark. You're not going to know what you're trading, right? Yeah, well, I like trading, the euro Norwegian kroner because it's my favorite. And the market doesn't care if it's your favorite, right? They care what's going on in this calendar. It tells you exactly what to trade, right? So look over here, August 5th, we have the French ACOB, expect 49.7 versus 49.6. I don't really worry about the numbers because what will happen is you'll get some fluctuation as a result of the number, right? And then we use our news phase strategy. We wait till after it does this initial push, and then we get on the side of the pump and dump, right? How many people have been victim of the pump and dump? You've been pumped and dumped, right? So in this case, what we want to do is to wait for the pump or the dump and then reverse it, right? So we look at the euro because France is in the eurozone. We don't trade the Deutsche Mark anymore. We trade the euro. Germany uses the euro. So we can use the euro for two announcements at around 3:50, close to 4 o'clock Eastern time, right? These are on Eastern time. At 8:30, we have Canadian data. So we have CAD balance of trade that's going to come out. We can trade the Canadian dollar. At 8:30, so the euro is going to be in play. The Canadian dollar is going to be in play. And then also we have the United States flag here, ISM services PMI, expected to rise from 50.8 to 51.5. Well, there's a lot of ways we can do. I like trading the euro again because the euro is considered the anti-dollar. So what's good for the U.S. economy is usually negative for the euro, and what's bad for the U.S. economy is good for the euro. So since the euro has this anti-dollar tone about it, I like trading the euro when I see an American flag, right? Then at 18:45, like right after, that's going to be about 6:45, almost 7 o'clock. You're going to have lots of New Zealand and Australian data coming out, right? New Zealand dollar, the nickname is called the kiwi, right? Not the kiwi, the fruit. It's actually a bird, a flightless bird with a long beak, and no, it's the kiwi. And this is the unemployment rate expected to rise from 5.1% to 5.3%. And unemployment change quarter on quarter is supposed to actually go from 0.1 to negative 0.2. This could be negative for the Kiwi dollar. But again, we want to let it react. Think of a rock, a big rock, and you throw it in the water and it creates a ripple. Well, the rock is the news, the water is the market, and the ripple is the movement of the stock. So we just want to ride that ripple, right? The news provides the catalyst or the movement, right? So we're not going to trade to Swiss franc. It's like, I like the Swiss franc. It's my favorite. The market doesn't care. The flag says New Zealand. Trade New Zealand something. You want to trade Swiss franc? How about New Zealand Swiss or New Zealand CAD? Or, right? So you want to use the economic calendar to focus your trading selection, right? That's what we do at Pip and Run of Elite Traders University. You can do what you want to do. If you do the opposite, we'll just take your money, right? Because you either pay us now or pay us later. But anyway, that's a topic for another story. Aussie trade balance is coming out, supposed to rise from 2.238 billion to 3.25 billion. Well, so much for those tariffs hurting global trade, where Australia's trade balance is actually going up. Could be beneficial for the Australian dollar. Then we have business inflation expectations for New Zealand as well, 3 days from now. And that's supposed to drop from 2.29% to 1.8%. Could affect it negatively. But again, the news tells us where the action is going to be, and all we got to do is sit back and watch. Now, you're probably saying, we got some Chinese data too. And you're probably saying, well, Greg, we don't trade the Chinese renminbi. The spreads are kind of wide and the margin's very high. And I say, yeah, you're absolutely right. But China is the largest trading partner of Australia and New Zealand. So like when the Chinese economy catches a cold, the Australian and New Zealand economies will catch the flu, right? They'll catch COVID, right? So by looking at the data, and if the data is very positive for China, it's usually going to be positive for New Zealand and Australia as well. So we can use the New Zealand dollar and the Australian dollar as proxies or substitutes to be able to capitalize on this Chinese data that's coming out on Wednesday, August 6th. Okay. And so they're expected to drop imports, actually imports year on year is supposed to rise 1.1% to 1.3%. Balance of trade is supposed to drop from 114.77 billion to 103.5 billion. And exports year on year is supposed to drop from 5.8% to 5.1%. Right? Now, if you want to trade the Swiss franc, there's only one announcement coming out. 2.7% unemployment rate is unchanged. You might find a reaction there. And here's another euro. The German flag. Germany is in the Eurozone. It's one of the largest economies in the Eurozone. So the news could move the euro. And we can see that its balance of trade is supposed to actually drop slightly from 18.4 billion to 18.3 billion, right? Now, this is Thursday, and there's something in the market called Super Thursday. Super Thursday is a very big time in the UK, where they release a lot of data really fast at the same time, right? So this, you're going to get the BOE or Bank of England Monetary Policy Report. You get the Bank of England vote, right? Vote on raising or lowering rates. They're going to have the Bank of England vote to hike. The Bank of England vote to cut, right? So and I'm glad that they did this way. They used to put it as one line, in which they had the unchanged, hike, and cut on the same line. So you have people who want to hike. 0 are saying they should hike rates. 8 people are voting for a cut, right? That's what is expected, right? Before it was 3, now it's 8. And usually means a softening economy, and that's why they need to cut rates. And if they're thinking about cutting rates, then we would see usually when there's a rate cut, the pound usually falls, right? Especially in light that the U.S. Jay Powell had a chance to cut rates last week and he didn't. He kept rates unchanged to the dismay of the administration here in the United States. However, Bank of England looks to be cutting rates. It's widely expected they're going to cut 25 basis points from 4.25% to 4%. Now you're looking at Union Jack flag, Union Jack flag, Union Jack flag, Union Jack flag, Union Jack. Yeah, 1, 2, 3, 4, 5, 6 flags, high impact items. What are you going to trade? Oh, I want to trade the South African rand because we had a hot tip. No, that's not going to work. Look at the flag. Trade the flag, right? Look at the flag. I call it fund with flags, not like Big Bang Theory fun with flags. This is fund with flags, right? So this is a dead giveaway. You just want to trade pound dollar, pound yen, pound Aussie, pound Swiss. You look for pound. This is where the action is going to be. So if you're trading Euro CAD and it's not moving, because you saw some structure or something weird or something that you thought, and guess what? You're the only one trading it, and it's not going to move. But guess what's going to move at 7 a.m.? And probably an hour or two before and several hours afterward. It's the pound, baby. That's what it's all about, the pound. So take all your charts and all your gobbledygook and throw it away. Look at your economic calendar, because that's going to tell you how to play the market. Right? Remember, blue horseshoe likes Anacott steel, right? That's a Wall Street reference. All right. 8:30 a.m. is a typical U.S. news cycle. At 8:30 a.m., we're going to have U.S. initial jobless claims. They're supposed to rise from 218,000 to 220,000. We just had non-farm payroll. Totally dismayed. A total disaster. A trash fire from 139,000 forecast to 71,000 or 72,000. And the BLS head got fired by Donald Trump. So we're seeing jobless claims. Now, this could be negative for the U.S. dollar, but again, I wouldn't trade during the announcement, okay, unless you have the predictive function in Pip and Run like we have. And and if it doesn't show up in the predictive function, we just wait for a news fade. So we are gonna trade this, but it all depends on the behavior before and after and during the announcement. Okay, and I would trade the euro. The euro would be my currency of choice at 8:30 a.m. There's an 8:30 a.m. news cycle and a 10 a.m. news cycle. There's news for the United States, right? And the UK, they seem like they release stuff with 7 a.m. is where they do their monetary. No, this is a Bank of England rate announcement. This is big. Super Thursday, huge, right? And then you have Canada has the IVPMI, and that's supposed to rise from 53.3 to 55.2. And all the Canadian flags there, and employment change, employment rate, participation rate. Unemployment is supposed to rise from 6.9% to 7%. Unemployment change drops from 81,000 to 15,000. So it seems like there's like kind of a global slowdown. You got the slowdown. I mean, that's a huge drop in jobs. Participation rate supposed to remain the same at 65.4%. And then we have the inflation rate out of China coming out too. That's going to be kind of late. Maybe the Australian dollar might give you some boost there, right? But that concludes the economic calendar. So I hope you got a lot of that. Now we're going to go right to the technicals. I know you guys are going, oh, Greg, get to the technicals. This is really boring. Don't worry. But it's very important. The economic calendar is one of the most important things that we want to look at, right? In fact, we're going to start the DXY. This is the dollar index. The U.S. dollar index is a basket of currency pairs versus the U.S. dollar. And basically, since we trade the major currency pairs, that the dollar is in the driver's seat of these pairs. And in fact, when you see me trade, if you sign up for our VIP school group where you're trading with me live 3 days a week for each month, just $97 a month, you get to watch me trade. I'll have the DXY on half my chart, and I have whatever I'm taking apart the next one, maybe dollar yen on one side or euro dollar next. And basically, I'm going to trade in the direction of the US dollar index. Right now, we can see that the US dollar index on a daily chart making lower highs and lower lows, right? And we get this little pop here, and then we have this drop here. This is a US dollar index. That's a daily. I like going out to weekly. And the weeklies, actually, we got this little nascent rally, higher highs, higher lows, but big rejection. Big rejection. We got as high as 121 rejection. And you can see, like, we have fallen quite a bit. I mean, there was a big piece of support. A lot of the dollar bulls were hoping that would hold. And then we're looking for a price to retest the high of 115.06, highs that we saw back in September 26, 2022. But we broke down. But we broke down, and it looks like we're trying to recover. We hit the back side of this trend of this support line here, right? And seasonally, we might continue to rally up to maybe the 30% retracement takes us to 101.91. So we could seasonally, typically around this time, we see the dollar rallying up until about September or October, and then we would see maybe a continuation down. So, but let's drop down to a daily chart. Daily chart, we're getting a little bit of a pullback, a big pullback, but big bearish engulfing, kind of like a morning, an evening star pattern right there, where we have the dollar really come down. So it'll be very interesting to see if we see some type of recovery from here. I still see this nascent little uptrend, higher highs and higher lows, and we have a higher high and a higher low. I mean, we've stopped here for now, but we still have a baby uptrend of some kind. So bulls versus bears, dollar index, I am slightly bullish. Okay, just slightly. You're gonna get one bull out of that, right? Now let's flip on the backside and take a look at the euro dollar, right? And we take a look at the euro dollar, we can see our daily chart. And you can see we had a nice uptrend, higher highs and higher lows. But we ran into a little bit of trouble. We ran into like almost like a pseudo double top, very close to a double top there. And then prices pull back a bit. And we got this big recovery on the daily chart here, right? But we're on the other side of this trend line, which is kind of bearish, right? We are recovering. Maybe we recover a little bit on Monday, right? And then we might be seeing some type of an A, B, C drop, right? So, but we do have this rising trend line here, so a demand line. We actually connect. I'm going to move that one off a little bit there, right? So there. So we're trapped. The price currently is trapped between two trend lines. And we can see a pop and drop, right? Three-wave correction, ABC. Interesting. I mean, it's kind of very interesting here that we had this drop and this pop. We're bullish above 117.82. We get above 118, and then we could go. We can go back. I mean, let's move that to a weekly chart, right? So that rejection there. I mean, if we can get past that area, there's nice area of space here at the 119, the 119.09 area, which was a high from August 30th, 2021. And we can break that area there. We'll have smooth sailing to 122.52, and that's a high we have not seen since June 2021. And then we've got the space 123.49, and that was a high of 2020, and and then we would see something like that, right? But I think basically we've got this weekly chart where we have this really strange candle here. The daily's doing a U-turn, but I don't think it's going to last a bit there. I think we're going to have an A, B, C drop. We break below 113.84. And we could see pretty steep decline. And mean, I love this. If this was our, we don't get any higher than that, then 100% expansion takes us down to like 113.09 or so. We also take just take a basic fib from the bottom, from the low to the high, and look for that red line. My red line is my 38% retracement, and the 30% retracement is at what? Well, 111.81. Expansion. No, sorry, I said 113. I said 111.13. One said 111.30. Okay, 111.30. I'm sorry, 111.30. Right. He knows the 38% retracement of the rise and the 100% expansion of the zigzag down. We almost have like some type of confluence there, right? So I think we get our confluence takes us down to this zone, right around that area, right around that puts us like one spot 111.4. Yeah, what's that? 111.14, right? Okay, there we go. Those strange numbers on the euro, right? So Bulls versus Bears. We are like short term, like 1 day bullish, but the rest of it we're bearish. I'm ultra bearish on the euro, right? Let's move on to the pound. Pound has big news. It has the Bank of England rate announcement. Let's go ahead and go across the pond. Take a look at the British pound sterling, and we can see that after our big rise from the King Charles bounce, I call it, right? We had the drop after the Queen Elizabeth passed away. Then we have this called the Prince or the King Charles bounce, and now we got a trend line break, and we're just breaking on down on the weekly chart with cascading lower lows and lower highs. We still have a nascent uptrend going on, but we could correct a little bit more. So the intermediate trend is down. The longer term trend is up, and we did tag this 38% retracement at one spot 3134. All right, 3134. We tagged it. But I think we get down to here. There's a 618. We have a tag right there. You tag, you're at one spot 2734. Right, that'll take us down. Let's take a Fibonacci expansion to that using that wick. And let's see if it comes to the same area. And the wick is at, well, the 1.618 typical expansion, and the 618 where this wick is, they're like, there's a zone, there's a confluence right there that you can look at that can be useful for a target. And as long as the dollar is up, we will probably see a continual move to the downside here, right? All right, now as we get down here, I would suspect that we get a bounce, and going into the year, usually pound and euro and Aussie rally going to the end of the year, but I think we are going to drop until October, and we'll get our turnaround there. So this might be a nice swing trade. I'm not a swing trader, but I will scalp around a core position, and I would definitely look at scalping this out. Bulls versus Bears. I look for bearishness to continue. Okay, so let's go ahead and we can look at dollar Swiss. Dollar Swiss is kind of cagey, because if the stock market starts to fall, what we see is we see Swiss franc. We see people buying the Swiss franc, rolling into Swiss franc for safety. And so typically around this time, seasonally, over the past 80 years, the stock market usually gets weak. It's traditionally weak in August, right? It's the stuff just a given, as we call it seasonality, that I can show you in a couple of graphs, a couple of Bloomberg terminal shots that I have are the seasonalities, right? We have our seasonalities. where we have the market kind of tank there, right? So this is the S&P seasonality, and you can see traditionally, August has been, I mean, it's kind of a mixed bag. 2024 actually was a good day for August, but you see August average 0.42 is pretty low, right, for August, right? Let me see if I have some others there. This is the Dow seasonality index, and you can see that 1.03. It's not particularly, August is not particularly good. 2022 is bad. 2023 is bad. 2020, we had all the stimulus coming in there. Those are like outliers, but 2019 was seasonally bad as well. And again, your risk assets are going to take it on the chin during the August period, right? Do we have any other seasonality charts? Yeah, but yeah. Okay. And let's see, let me do this one. Okay. And let's go to Jeff Michaels. Oh, no. Okay. Anyway, I'll show you that later. Okay, so dollar Swiss looks like it's curling over for a drop. Daily chart, we have these lower swing highs, lower swing lows, and we can go to a 4-hour chart, and you can see big bearish engulfing candle, and it looks like it's gonna try to grab some speed to the south side. There's a 4-hour chart, and I can zoom this in a little bit more and bring this over a little bit more here too, and we can see that after this hitting the 200 moving average, we see price kind of moving down. Okay, so dollar Swiss, and what we would say about that, it's bearish. And well, let's go to our. Okay, we're gonna go across to dollar CAD. Let's go across the pond. Dollar CAD weekly chart. Different, even though they're both a dollar pair, and we see that in dollar CAD, Canadian dollar is really influenced by oil. They're a big producer of oil. In fact, the Canadian dollar is one of the commodity currencies or COMDOLs. New Zealand is a COMDOL. Australia is a COMDOL. The commodity dollars are commodity-based currencies. They rely on exports. And right now, the price of oil is kind of down, and consumption is kind of slow. And so you might see the dollar continue to rally against the Canadian dollar. But let's go ahead and take a look at some charts. And we can see that we do have a slight uptrend on the weekly chart, higher highs, right? Harami could be bearish, but we are sloping higher. Weekly chart as well, hitting this support area and then maybe rising, right? Nice bit of a gap here that could be filled from the 142.58 area down to the 138 area. So plenty of room there. Daily chart, though, not so encouraging. Looks like we might get a little bit of a pullback, right? We do have, triple bottom in that area, and then we have this rising trend line. Hasn't been really tested yet. 4-hour chart, though, we do have maybe some type of a morning star, a bobbing pattern starting, and it's probably happening at a Fibonacci zone as well. At the 38% retracement, 38% retracement is always my red line. We're getting buyers stepping in here. So bulls versus bears, I am bullish the dollar CAD. Okay. Let's go ahead and move on to the dollar yen. Okay. And dollar yen moving, it has a very tight correlation. I wrote an article about that in our community with the S&P 500, right? In fact, this is the S&P 500, which is a line, and this is the dollar CAD. So as the dollar yen was dropping, the S&P 500, the ES mini, it was the mini S&P was dropping. So you have this tight correlation, right? So So we might see a rebound, after a big drop like that. Usually there's bargain hunters that can't come in, and that may give us a bounce on the dollar yen, and a bounce if you're trading ES. You might look for a bounce on Monday, and we can bounce back up to this 38% retracement for the euro. I mean, for the euro, for the dollar yen. We're looking for a bounce to maybe 148.63. They used to call it a dead cat bounce. Don't blame me. This is not PETA. Don't write me a letter, right? They call it a dead cat bounce. They say if you throw a cat out the window, it will bounce, right? So as fast as this falling, we could get a bounce. And if the bounce does something like this, which I'll outline, it's tradable. It's a 4-hour chart, so we might get a few hours or maybe even a day or so of bounce before we see a retracement, right? So we may see something like this, a bounce up to the 148.63 area, and then a drop, right, to come back down to this 146.01 area, right? So I'm looking for, bulls versus bears. I am short-term bullish, medium-term bearish on the dollar yen. And that's where we're at 147.38 right now. So that's about, a good 120 pips rise we could see, right? Okay, let's keep it going, keep it spicy, keep it moving. Let's take a look at the Australian dollar, right? Let's do this AUDUSD, MOUSC, and we'll take a look at it, all right? And we'll start off with our higher time frame top-down analysis, and we can see that this thing is struggling after making a low of 59.14 back in April of 2025, and it's an untested low. And usually you get a retest of the low. We are making lower lows and lower highs on this weekly chart, as we can see, where we got this. It's like a Drake song spelled backwards from the top to the bottom, and now we're here, right? After you blow it all on coke and women, that's what happens, right? And so we're sloping downward, maybe a retest of 59.10. That's the weekly chart. Look to a daily, get a little rebound. And again, I think these rebounds on a Monday, manic Monday, turnaround Tuesday, you see a rebound, maybe up to 64.98 or so, or maybe even up to 65.39. And then we got an A, B, and C later, right? And this is like a megaphone pattern. Expanding megaphone is usually a bearish pattern, right? Got that megaphone, this cheerleaders, the megaphone. So you have this megaphone pattern, usually bearish, and we could probably see a move down. If we take just a typical retrace, then our first TP target would be 63.54. That's what I would look at as a possible target. Once this thing rebounds, maybe goes up a little higher, almost like a volleyball spike, let it pop up, sell high like Snoop Dogg, and buy back low, right? So that'll be my first target. Aussie dollar, bulls versus bears, short-term bullish, medium to long-term bearish. Okay, we covered that. We covered the Asian currency, New Zealand dollar. Let's take a look at the Kiwi. All right, Kiwi was our friend. We've been smacking that baby back and forth because we had a nice little double bottom opportunity right here in that fit 0.5501 area. We tested it back on April 7th, and then we rallied, right? Usually a double bottom rallies to this old high, right? I don't think we're going to get that high, right? Why? Because we have these sloping lower swing highs, and we got a little bit of a pop, right? So maybe we rally, rebound a little higher, but I think we based on what I'm looking at, No, I don't even think we rebound that high. I mean, we got that trend line there, sloping down. This is droopy, right? The dollar's gonna, if the dollar strength does bear out, then we will see. Let's get see the Kiwi dollar continue to move higher, right? If it got above 61.25, I mean, there's lots of overhead resistance. There's lots of supply zones. There's like it's a lot of stuff that has to get through to even go bullish. So I'm bearish on this pair. Okay, let's take a look at gold, right? The shiny stuff. And you can see it's been on a tear. It's the highest price has ever been in the history of mankind, right? It's never ever been this. I mean, you go back. I remember it was $300 an ounce back in the day, right? Back in the 90s when my daughter was born, it was like $300. And there was this guy who would come on TV on Channel 22, and he was the gold report, and he would predict gold will be $10,000. Gold will be 10,000. I mean, and he would just come on and really talk about gold, try to talk it up, and every time there's a slow rally, this is it. This is a big move, and you get this big move, right? And he died. It was unfortunate he died before it even got above $400, right? But when it did, it never came back, right? Now you gotta understand that JP Morgan Chase had two traders arrested because for 10 years, they manipulated the gold market and kept it in a tight range for the entire globe, the entire planet. Gold prices were controlled by two people at JP Morgan Chase. And now, got those guys in jail. We had the breakout, huge breakout, right? Okay, well, anyway, that's a little bit of history there. Go ahead, fact check me, look it up online. By Gas Chat GPT, right? But here we go. We've been moving sideways in a flag formation, because remember, this is gold versus the US dollar. It's like, what do you rather own? I mean, they sell gold at Costco, okay? Do you want dollars or you want gold? Well, if I had to eat right now, I mean, I can't take a bar of gold to Burger King, or a Fat Burger, or Taco Bell. It's like, they need dollars, right? But for an investment opportunity, would you switch back to dollars? And the answer is no. Why? Because of inflation, because of the decreasing purchasing value. It's not inflation. People talk about it's inflation. Things are getting higher. No, they're not. They're not getting higher. What are you talking about, Greg? Things are higher. No, they're not. What's happening is your buying power is getting lower. You buy less with your dollars than you used to buy, right? I remember my dad filling up the tank of his car for $5, right? When gas was 33 cents a gallon, right? So why is gas costing, I mean, it's cheaper now, but it's $2. But I remember when it was 50 cents, 75 cents. When I was in college, it was $1, right? So what happened? Well, it was inflation. It was like my dollar didn't buy as much anymore, so I need more dollars, right? So it's not that things are getting any more expensive. It's just that your dollar does not buy as much, right? Which is great. That's like saying that if somebody told you your dollar is getting weaker, you would panic. You would get rid of all your paper money and put it in gold or Bitcoin, right? But remember that the dollar is backed by the good faith of the U.S. government, right? It's not back there. Go back. I mean, we're supposed to get a tour of Fort Knox, and we have not seen inside of Fort Knox yet, guys. All right. Oh yeah, the Jeffrey Epstein files, and we're going to see Fort Knox. That Fort Knox tour got nixed, right? We didn't hear anything more about that. Why? There's rumors that there's no gold there, that Charles de Gaulle in France requested all their gold back, back in the 70s when we went off the gold standard. So there's probably nothing there, right? So my point is that this is forming this high and tight flag. we're probably not going to see any type of retracement. This might move sideways for a while and then break out, right? And which we call this a high and tight bull flag. You got your flag pole, right? And then you have the flag, right? And then you can take the high of the flag and extend it. And well, gee, we went from up almost 1,000. Well, we could get to 5,000, right? Just take the height of this and just add that, and then we've got some crazy number, right? Because they're mining gold, but we can see 4,000 in gold, right? So bulls versus bears, definitely bullish. Long term, you can scalp it. Short term, and maybe scalp any type of pullbacks against the trend, right? I mean, yeah, you could have shorted here and then made some money here, right? If you are trading gold, right? If you are trading, just remember the market tide is favorable toward buys, right? So yeah, you could have shorted from here and took it down, but I would rather buy here a higher high, a higher high, higher low, right? And then break out above support. I'm a buyer here, right? So I'm bullish. And I would even cop out. I'll scalp this up. And when it wants to double top and drop, I just leave it alone, right? I don't want to get caught, right? And then I would just trade the bias. My bias would be scalping gold, right? Okay, let's take a look at oil. And I don't have it in my little portfolio. Someone's going to put U.S. oil in there. And I'll probably look at West Texas Intermediate, since I used to live in Texas. Why not, right? And then here we go. So even with the bombings and the Iranian bombings and things like that, we saw a little spike. And I mean, really, we haven't gone anywhere. We're still in this 55 to 76 area, right? And we have this really long spike and a pullback, right? And we have maybe some type of a flag formation, right? So I think I would be, and then we're switching off. The summer driving season is coming to an end. We're switching over to heating oil, right? So unleaded fuel demand, summer driving is off. So we might see, unless we see some type of other event, I could see I would be bearish, slightly bearish oil. I mean, mostly new. I mean, we haven't really gone anywhere, right? Against this wick, I would love to get short, right? ABC. But I think we're in a range. I think once we get back down around 50 area, that the oil is a buy. It'll take it back up. I think every time it comes down to 50, it's a buy. I think we go down there. So I'm short-term bearish, medium-term bullish. Okay. And the final thing I'll look at is our friend, the BTC/USD, Bitcoin, digital gold, right? And, we're in an off-season kind of thing. Whoa, look at that. What a drop did we, man, I might have fallen. We were at 123, and now we're at 113, right? And a lot of people are going, oh my God, I should sell. I'm like, well, this is an uptrend still, right? Higher highs and higher lows. And I have a real special Bitcoin investment plan. If you'd like to request it, message me in the below. I'll send it to you. And it's basically, if you bought Bitcoin, my cousin bought some Bitcoin, and we just put $700. I set her wallet up, and we put $700 in it back in 2017. And well, guess what? She's a doctor. She's very busy. She had no time to look at it. One day, she found her phone ran out of space, and she was deleting apps. She saw this Coinbase app. She didn't know what it was. She clicked it, and she had like $7,000 in her wallet off of a $700 investment, right? She calls me up. I never hear from her. She calls. She goes, Greg, that Bitcoin you bought for me back in 2017. I go, yeah. Well, it's worth like $7,000 right now. I just sold it. I go, well, great. That's an idea. I bought a bunch of crap coins that really didn't go anywhere. I would dollar cost average. If it goes down like this, hey, you're buying, maybe $200 a week. And I'll show you in that plan. Just, ask me about it. And I say, anytime it goes down, I'm buying, and it goes up, I'm buying. I'm just dollar cost averaging all the way up. This thing is forming a range rider up. The quote my old guru, teacher, Wade Cook. He talked about the range rider, right? Where he's riding the range, right? Go up to the top, rally back to the bottom. And then, hey, the rallies, if you take the angles of these things, right? We look at the rally, we're looking at the 100% expansion rally will take us back up to above 130, right? You take, right? Yeah, 100% expansion takes us to 137.23, right? So right about there, right? It's about that math, People, how can you do that, Greg? Well, tell me what grade you got in math, right? Well, this is a math. This is a little bit of math. This thing follows these regular, not a lot of math. It's not super hard math. It's like the cool, fun stuff that really kids, if they really taught kids this and they tied it to money, we would have schools of mathematical geniuses. I mean, my daughter got an A in calculus. It's like, it's like, where does she come from? Right. But yeah. But you see that you just take the height of this and you project it and you get like how far it's going to go. Right. So I'm bullish on Bitcoin, even though it's pulled back quite a bit. And right there, we got a nice little maybe morning star pattern at a level of support. This is a line formed by 2 points. I love this type of a trade. My good, I'm going to give you a little piece of my 30 years of wisdom here. When you got 2 points that make a line, that's geometry 101, guys. 2 points make a line, right? Project that line into the future. Oh my goodness, it tagged the line. So this is the first test of a line created by these 2 points. Mommy and daddy created a baby, right? And that baby's going to take off. That's what we say, right? So 2 points make a line, extend the line, wait for contact, and now you can drill down and you can look for, your risk to reward. You don't, if you get below 111, by saying, like Greg, full of crap. It's not true, right? But that's that. I'm just gonna stick with that. Okay. So you stuck with the end, and I want to thank you so much for staying to the end with me. And I'm going to give you that free gift, right? And I want to take you over to our free school community where I've loaded a bunch of free goodies for you. So you come to the school community at Elite Traders University of School, right there. And when you sign up, you ask a couple of questions. It's absolutely free. You get access to our library, our Baby Forex Pips, which has 16 videos about Forex trading. If you're brand new to Forex trading or you need a refresher course, each video is very short, easy to digest, very simple. And then you can graduate to our next course, the Forex Foundation freshman course. Talks about risk management. Each video is a little bit longer, margin and basics, how to trade currency crosses, choosing a trading style, choosing swing versus scalping, right? And then after you finish that, there's also the Samurai Sword strategy course made by one of my $1 million traders. When my traders do well, I have them create a course. That's Elite Traders University. It's not made of theory, but people who've made 6 or 7 figures, once they do that, I have them take what they may take out Pip and Run and make that into their course, right? So you get access to this course when you join the Elite Traders University school community. And again, that's a free gift for you for staying to the end. And I know that we have a vibrant community of traders from around the world, sharing candlestick patterns and how to trade different currency pairs, different specialists here to really help you and communicate with people. We have people from all over the world, right? We have people all around the world and we're the fastest growing Forex community devoted to short-term scalping called day trading. So again, that's why. So, like what I'm saying is that, so if you're ready to finally pass your prop firm challenge without stress and guesswork, and if you've been spinning your wheels trying to scalp your way to funded trader status, blowing accounts, second guessing entries, or just barely missing your targets, you're not alone. That's exactly why I created the Pip and Run school community at Elite Traders University, a free supportive space for traders who want real results using proven strategies that work in today's fast moving markets. From me, a former Wall Street currency analyst and strategist at one of the world's largest Forex broker dealers in the world. So you get access to real system designed for scalpers. We're not past prop challenges without blowing an account. Connect with other focused traders who are actually doing it and get support and resources and guidance without the fluff. You can join now for free. Just click the link in the chat and the description. And I look forward to seeing you inside. Okay. So anyway, that's the end for us. I want to again make sure you like, share, and subscribe to the channel. That's the way we get our message out to help people. My mission is to help 1,000 people become millionaires in 2025 or 2026, actually. So you can be my next case study. I look forward to helping you and serving you. My name is Dr. Gregory McLeod, and I do approve this message.